What's up, guys? Day trading knockouts here. If you didn't notice, Charles Schwab just did the the whole transfer with the TD Ameritrade trade accounts on Thinkorswim. So we are gonna be if you notice, we are gonna have a different looking type of chart. We are gonna be a bit handicapped, but not to worry, not to fret. We're still gonna prepare for the next week and figure out how to look up for any setup for next week and what to do specifically. So with that being said, guys, let's get into the video. So with that being said, first off, we're going to be start by looking on the higher time frame charts on the weekly. And as you can see here, we do have very bullish looking types of moves. We are currently on a bullish uptrend with higher highs, higher lows. And we're currently at the highs of this current uptrend, this up move from the higher low. And we're getting closer to the higher highs of the all-time highs at 524.61 on the SPY. So in terms of that, bulls are in control from a price action perspective. And when you take more things into account, you can see here that first off, there aren't any chart patterns showing that there's potential signs of failure to reverse, to continue in the upward direction. The only type of caution that I would say, guys, is just be careful with looking at the getting a double top here with no follow through. That could potentially present a double top type of scenario. But at the moment, that's just potential, but it is something that could happen. And also on top of that, when you look at the candle individually, what you see here is you get a very bullish candle. No wick at the lows at all, very minimal wick at the tops, and we have a close at the highs. So this is pretty much constitutes almost a naked body bar for the bulls. So right now on the weekly time frame chart, all of the context is showing that the bulls are in control and they're strong. Now, from a Fibonacci perspective, I do have that. So I will tell you that from the highs to the lows, obviously what you're going to see here, 0% retracement, but from the lows, from the highs to the lows, we are above the 61.8% retracement. It is a little bit hard to see it on the screens, but when you zoom in, you can see right there. So everything from the Fibonacci perspective, the price action perspective is bullish. And lastly, I can't show it on the chart because the study isn't there. They're going to transfer it over on Monday, and I'll see all that, but in terms of the weekly volume profile, we are above the very high volume node of $512. So that is another thing to take into consideration. Just know bulls are showing confidence with price action, higher highs, higher lows, very naked bullish body candle, and the Fibonacci retracements is another piece of data showing confidence for the bulls, and the weekly volume profile all is above the $512 high volume node. So with all those things in alignment, bulls are in control. I would say the context is bulls are in a very comfortable spot and they're doing very good right now. So let's get a little bit shorter on the day time frame chart and see what's going on there. So first off, the weekly positive expected move is $527.68, which is a higher high, and 514 is a negative weekly expected move, and that is a higher low. So with all that so that is also another bullish indication showing bulls are in control. We are currently in an uptrend as well. As you can see, we got a higher high, higher low, higher high, and we did it after reverse it, and we are reversing all of this bearish price action that we had, especially this candle right here, the 0415. Man, it was pretty crazy for the bears at that moment, and it was looking pretty bearish. But again, anything can happen in the market, so never panic. Just go along with what the data says and trade accordingly and trade smart. So that's why you always got to go off of what the data shows, because again, 1 week it could be very bearish, and then of a sudden you can see it reverse. And in terms of the Fibonacci perspective there, obviously it's going to be very bullish because from the highs to the lows, it's going to be a 0% retracement. And from the highs to the lows there, it's going to be nearly a 100% retracement. So lows to highs, 0% retracement, highs to lows, 100% retracement. So we're good there. Now, in terms of the context is also bullish. With everything I mentioned with the price action and the positioning of where we are. The only thing is make sure if we can get followed through here. Any 1 hour higher low above here would be tremendous for the bulls especially. Now, when we get more granular and we look at the hourly chart here, we're going to see here that we still are in a bullish uptrend as well. We got higher high, higher high, higher highs, and you got somewhat of a minimal higher low. We don't have a solid higher low, but again, it's more granular here on the hourly chart, so it doesn't have to be as precise as like the weekly and the day time frame. But overall, it's a bullish uptrend where higher highs, higher lows. Now, in terms of looking for inflection points to see who's more dominating and who would have more control at what point, I charted that anything above $517.50 right here, bulls are more control. anything in between $570 all the way to $508.50. Things are a little more shaky for the bulls, and they start to get more shaky the lower you go. And anything below $508.50, the bears are more control. So just take all that into consideration. With setups to avoid, first off, I'm going to say that if I'm going to take any bullish setups above the highs of the uh, the highs of the day from yesterday, let's go to the 5 minute chart real quick. If I'm going to be looking for any trades above here, what I need to take into consideration is I must look for a solid 15-minute bullish chart pattern, and don't just be chasing the market just because the bulls are in control. Don't be trigger happy. Go with solid setups that are on the chart. And the second thing is don't be too trigger happy. Again, like mentioned, like I just said, sorry for repeating myself, guys, but don't be too trigger happy. Go with what the setups are showing you. Number three is don't chase the markets. Set up to avoid. Number four is have higher standards for my trades. And the fifth thing is don't take any trades without the proper 15-minute higher time frame confirmation. Lastly, for the bullish setups I'm going to be looking for, look for a 15-minute higher low above $522.64. And my targets would be $524.15. And then $525.15 is the optimal target. Next is the bullish scenario number two is we're going to be looking for a 15-minute bullish chart pattern around $520.27, pretty much around here in this consolidation. And we would be targeting $521.90, and then $522.90 is the optimal target. Lastly, look for a retest around $518.50, right around here in this area. It looks better on the hourly chart. You'll see why, but sorry, guys. Let me see, $518.50. So in this area right here at the lows there around this little consolidation on the hourly, look for a retest there, and we would target $520.21, and then $521 is the optimal target. Now, notice all of my scenarios are bullish right now. You might be confused saying, hey, you said don't be too biased, don't be too trigger happy for the bulls. At the moment with what the data is showing, it is obvious to be more biased for the bulls, but the way you don't get too trigger happy, even though there's more of a bullish bias and I'm more of a whiff trend trader, is I make sure that I always be patient, have higher standards, be picky with my trades, and make sure that the 15-minute time frame chart is absolutely great. Unless those things are not in alignment, then I don't take a trade. But again, that's what I do, so make sure you do it as well. It'll be good for you guys. But I can't look at the market pro. I can't look at the market internals at the moment because that's down right now. I don't have that study. It'll all be back on Monday, so we'll be back to normally regular scheduled program as always. But besides, guys, I'm more than happy to be able to do this with you guys. It's always a pleasure. Please, guys, if you have any questions, comments, or concerns, please comment below. I'll be happy to answer for you guys. But stay safe, stay green, and stay smart trading, guys. Peace. Day trading knockouts out.